Hey guys, DJ from PTA going over August 17th trades. I didn't place any trades today. Was away for the market, but there was only two worth noting on that day. SAVA and JCSE. First, as always, go over the SPY. As I said, I was looking for that push away off of the 200 for that test. Markets would then tell us exactly which way it's going to go. So it did gap down, try to go higher, and then end up pushing down. So I'm looking like shorts may be trying to they're either going to get trapped and get pushed out really hard, or they're loading up to go into a longer trend. So this may be a part, very critical couple of days just to see how the market reacts, so on and so forth. First trade we'll go over is JCSE. It did do a float rotation. This one here was a little bit of a bounce off of the 165, breaking out previous week's high. I'm looking at the stock, had 32 million in volume overall. I think it was 38 actually. But looking at everything, basically we had a little pop and pull move in my opinion, but it was still a good opportunity to make some money off of it. This one here is one you would have had to catch first thing in the morning. There was only two spots really. Those two spots, if you had caught it first thing in the morning, would have been off of the support. So support was obviously right here. You had previous day close, previous day high, as well as weekly high, bringing in the support for it to rip. Right here was your first point. This created A. This created A. Then you had to pull back, and this is where it got a little choppy right here in this candle here, where a lot of people got kind of screwed or messed up at. And that's where you would have had to take it from the higher time frame and pay attention to the actual move. But let's circle back to the higher time frame. Let's go to a 30. As you can see, it still was making higher lows from off of the support area. So this pullback was just this way of adding some energy for it to go back in. Going down to the 15, you would have saw once you got this pullback off the 15, you seen boom, boom, going into it, your price would have been about 310. Right around that area is where it was probably more likely ready. Somewhere in that area. So let's go back down to the 1 minute to take a look at it. As you can see, it dropped, found some support at 270, pulled back, and then right there is where it starts to get kind of interesting. Right there. So right here at this 308, 310 area, as I stated earlier, this is where you was pushing out probably the final point of shorts. The final area of shorts that were sitting in the stock after it had been grinding up. Looking at the level 2 is probably around that 310 area. Just looking at the chart. Right there was right where it got kind of interesting. So you basically got your support, B, your bounce. This created C. This probably played more like a breakout move for some, depending on your risk tolerance. You know, you would have probably got in here, risking to probably about here with an additional push. But because of the ATR and everything, you would have had to wait. Wasn't a lot of range in this to begin with. So, you know, right here about that 314, probably level 2 somewhere around 315. So between that 310, 315 area is probably where it got interesting and took off. Took off 310 to 360, nice 50-cent move, pulled back. As you can see, it wanted to come back and respect the support. So right here, as you can see, turn into purple because that is intraday. Same with this one. So when you're looking at these stocks, it's more so how is it respecting the areas that it's coming from. So as you can see, when it broke out here, retested, came back, test, created support, pulled back, started to grind higher, then used this area here as its springboard. So from there, it pulled up, pulled back, and then took off. So it was a great area to get in. Just had to wait for it to form and give yourself some breathing room. Once it formed, as you can see, it broke out, hit 360, came back, respected that same 315 area, and then carried on to 368. And then after that, it kind of just broke down. And then if you look at this area, you can see that how they gathered it again to break it down even further around 315. So probably somewhere on the level 2, if you were paying attention looking at the stock, you would see that in that stock, in that area, that was a critical area, and you probably would see some type of rebidding, resurfacing of the stock, something along that area that would tell you that, okay, 315 is the area. That's similar to what happened to my trade on VRDN on Monday. It just kept rebidding at 24. So if you go back to that VRDN chart from Monday, you will see at 24 there was some type of rebidding. You can see the gathering. So let me kind of quickly show you that VRDN. Let's go back here. So just to kind of give you an idea, we're going to draw a line at 24. And I'm going to put this purple because we know that's entry day. Left extension also can go all the way through. Now, take a look at this line because it'll make sense once we play that. So Monday was the 15th. As you can see, right here is right where that 24. Now, I saw it back here that this was probably a potential area where they were going to be shorting. Some massive orders came in off the bid right here at 24, which ended me getting out at 24.07. It came back, popped there again. It popped there again. It did a massive pop. That's when they completely loaded into it from off of the 24, and then they flushed it. And for the rest of the day, it kind of just went down. This is the reason why this became a very critical area here the next day, because of that 24 bid action that I saw on the level 2 the day before. So these key areas, these support and resistance areas, they'll show ultimately on the level 2. You just have to know or look and be there to see the price action or whatever. Or you can pretty much take an idea based on the chart. But if you look at those key areas, those round numbers, a lot of times you'll get that area. So when it bounced and held, couldn't get over 26. This is a classic short pattern. It's where they push it first thing up in the morning, drop it, and push it back up to the area, drop it. But they always come back for a retest, and this was the retest. So they'll drop it, bring it back up, and then retest it. They couldn't get it higher, so everybody just used this as the risk, and then they faded it. Now, why was it a good fade? Well, it didn't have a lot of volume to begin with, so that faded it pretty well. But also this 24, it was searching for orders, dropped back down here to 24, which was the previous area before, and then they washed it from 24 back down to 22.45. So a lot of times you can see the play forming because of an area, a key area that has been using, or some potential area that's been using for multiple days. So kind of wanted to show you that and show you that correlation between VRDN as well as JCSE when it was using a specific area to load and take shares off. If you know where those areas at and you can buy or short in those areas only, gives you a higher probability of a trade going the proper way for you. The next trade I'm going to go over is Sava, SAVA. This was the last decent trade that happened for the day. We're coming off of that bounce. breaking out of previous week high, coming into this day, previous month high at 28.74 is a critical area. You also got to keep into consideration the 200-day moving average, but the pattern was there. The biggest thing is when you're looking at this trade is really pinpointing the support and resistance. So one of your key areas of support was right here. It played as resistance as well, but you have to make sure you have those key areas. So right there. So what I always do when it's kind of confusing, I like to try to take it out to a higher time frame, just so that I can kind of get an idea where things were going. So this really played as support there, and some people probably played it off this area right here, right there. So I'll say 1840. And then you had this area here, rejected. So I'll say it's 2270. Gonna leave that one in the blue because I was from the daily. And then you probably had this as a critical area as well. Let's call that 3030. And that one's gonna be white because that's weekly. All right, so you got your pretty much your good areas. Let's go back down to the daily and see if we see anything else. I don't really see anything else worth mentioning at this point, because this is where it broke down from right here. Maybe right here was a good area, because this is where it broke down from. About right here. So 24.25. And then we'll remove that one. So maybe that was your key areas looking at the chart. Remember that it bounced, pulled away, came back, reject, and then pulled away. So 24.25 was a pretty decent area. I'll probably call that 24, 25 cent range, probably between 24 and 20, 24, 25. Somewhere in that area was probably a very interesting area to look at. All right. So when you break this down into a 5-minute, you gotta go, and I like to start off from the higher time frames, but because I'm in the entry day, I kind of start off with a 30 to see what it was doing. So this was A, and then you had some support being built here at 23.25, 23.30. Okay, off of the A standpoint, you pulled back, and then it found some support. It bounced and then pulled back, but look at where it's rejecting at right here at 24.25. So this is a critical area, because this is about $1 difference, but you got to look at what's going on. You had this pullback, and then you had a pull up. So that's going to look a little bit different on the 15. Now let's go to the hour. And you can really see that this was support, boom, boom, and then it had a pullback. Go back to the 2 hour, and this is why I use multiple time frames to kind of give you an idea. So your support was right there, about 20, 30. They pulled it up, green candle, taking over. Right here is where it got kind of interesting. So let's look at this 15. Remember, this was your support. So let me draw it out just so you can see. This is entry day support. Or you can call that major support, because I was coming off the higher time frame. Pull back, bounce, pull back. This is right where it got kind of interesting. This would have been your first key area of entry right there when it did this pullback. So first thing in the morning, this would have been a good move. So what I always do, it always yanks back up. In most cases, it's going to go back up to the A area and pull back. So this is the A area. I'm going to paint that a different color just so we can kind of have an idea of what's going on. So I'm gonna make that one pink, purple. That's A. So when it pulled back, this would have been an ideal entry risking off of here. Somewhere here, 24.81, 23. It's really a big risk. But you would have probably been able to find something a little bit closer on the 1 minute, just on that ramp. But to play it safe, yeah, you would have got in probably about right here, right at 24.25, the risk to 24. Or even if you risked it down to 23.60. So it would have been about 40-cent risk right there coming off of the open. Didn't have a lot of volume, but it definitely held. So when the volume actually comes in, it's where the sweet spot would have took off at. Now, what would have been ideal is that, remember, from the higher time frame, you're looking at it from A, point B. When it rose up and failed A, this would have formed your next pattern off of volume. So it pulled back, bounced, and then right there, 2660s area, about 40-50 cent risk from here to here, and it broke out. Once it got over A, it just kept going. Now remember, 30-30 was key area off the monthly. So your ideal entry would have been somewhere right here at 2650s, risking about 30-40 cent right here. It yanked up into the 30-30. And the reason for that is because you had your pattern forming. So not only did you just get over a pattern there, you had an even better pattern right there with the springboard. So when it bounced and pulled, right here would have been your risk off of this area back in the zone. It pulled away and went to 34. Great trade. Great fundamental trade based on just pattern, but you have to wait for it. One of the key things is that you saw the bigger trend and then you join it. So you can do the higher risk knowing that you have a bigger trend at hand and that the stock wants to go higher. And this was the first leg up in the pullback. And then when it failed this pullback, that was acting as another sign that it wanted to go higher. So when you see it, a bigger trend, pullback, break, then a pullback and a continuation, that is the next move. And that's why this move was much higher or greater than this move. So another way that traders look at it is, I'm going to look at the range. So this is the range. Okay. Let me see something here. So this range on this one, it's about $7.24. This went 842. So 742 range stretch. It duplicated it. So a lot of traders don't do this, but it works. When you know the range, 730 from the high to peak of A, you can then duplicate that and know which way you're going. Do that again. And it's about $7.30 move. So looking for that on the opposite end on the pull would have gave you a full range of that move. All right, guys. Thanks for tuning in. If you have any questions, concerns, leave it in the comments section. Make sure you hit that like button, hit that subscribe button, turn on that notification so you don't miss none of our videos. And as I always tell old traders and new, stay studying, stay focused.